Hey everyone, ready for another deep dive? Today, we're taking a look at Schaeffler India, their Q4 and the full year 2024 results, and we've got a lot to work with this time. We got the earnings call transcripts, press releases, even some notes from another podcast I was listening to about them. And what's really interesting here is that even with India's economy, being a bit shaky lately, Schaeffler managed to pull off some really impressive wins. It's almost like they're balancing, you know, reducing capital expenditures on the one hand, but still investing in growth on the other.
Yeah, it is fascinating, isn't it? This is what makes this deep dive so intriguing, is that Schaeffler's operating within a really complex economic landscape. And even their own reports show that India's GDP growth was at a decent 6.8% for Q4 2024. Industrial production bounced back. And you won't believe this, furniture was a big driver of that rebound.
Furniture, really. That's not the first thing that comes to mind when I think of industrial production.
Yeah, right. But that's what I love about economics is the unexpected details. But of course, we can't ignore the elephant in the room. Inflation, food prices especially, or a concern. And, that has an impact on everyone. Now, for Schaeffler, the auto industry is key. And that had a mixed bag of results in Q4. Two-wheelers were booming, 15.5% growth. Passenger vehicles were doing all right, but commercial vehicles struggled. Makes you wonder if that's connected to, the inflation and how it's impacting consumer spending.
That's a really good point. And something for us to consider as we kind of go deeper here. Speaking of the auto industry, how did tractors perform? I know that they're a pretty significant part of Chrysler's business in India.
You're right, tractors are crucial for Schaeffler, especially in a market like India. And thankfully, they showed resilience in Q4, so that's a good sign for Schaeffler as it indicates a steady demand, in a sector they're heavily invested in.
Okay, so it sounds like they were walking a bit of a tightrope with this economic backdrop, but they still managed to pull off some incredible wins. We're talking double-digit revenue growth for the full year.
Exactly, 11.8% to be precise. And what's even more impressive is that they maintain profitability, despite all these challenges. So this demonstrates, I think, a strong understanding of financial management and a real keen ability to adapt to changing market conditions.
Yeah, maintaining profitability is one thing, but they actually increased their dividend payout. That's something that you as someone potentially interested in the company should take note of.
Absolutely. It signals confidence in their future prospects. And it's interesting, too, to note that at the start of the earnings call, they highlighted all the numerous customer awards that they received. So even amidst this, volatile quarter, they're continuing to prioritize quality and customer satisfaction, which speaks volumes about their commitment to excellence.
Yeah, it's like they're laser focused on, delivering value even when the going gets tough. So how did they manage this balancing act? How do they pull off these wins, despite this challenging economic landscape?
Well, to understand that, we need to break down Schaeffler's different business segments. Automotive technologies is their core, but even in India, the shift to electric vehicles is happening, and Schaeffler is prepared for that.
That's interesting. We often think of electric vehicles as cars.
Yeah.
But you mentioned electric two-wheelers earlier. Are they involved in that segment as well?
You're right. That two-wheeler market is huge in India, and Schaeffler is already developing solutions for that segment. So they're not just watching the electric vehicle trend, they're actively participating in it across, different vehicle types.
That's really smart. So let's go back to the business segments for a second. What about vehicle lifetime solutions?
That area saw a slight dip, but Schaeffler's making a strategic shift here that's worth exploring further.
Okay, I'm all ears. What are they doing differently? And what about their bearings and industrial solutions segment? I have a feeling that's where the real growth story is.
You're spot on. Remember those strong industrial production numbers we discussed earlier? Well, that's a key driver here. Plus, a surprising 15–20% of their bearings and industrial solutions revenue is coming from wind energy.
Wind energy. Wow, that's fascinating. So they're not just riding the wave of electric vehicles, but also tapping into the renewable energy boom. What about their exports? How did they perform given the current global economic situation?
Exports are rebounding, possibly due to a slightly more stable situation in Europe, which is a major market for them. But here's the question. How can Schaeffler be cutting capital expenditures and still investing in growth? It seems contradictory.
That's a great question. How do they explain this seemingly conflicting approach?
It all comes down to a shift in focus. Their past spending was heavily weighted towards infrastructure. Think new buildings, expanding their footprint.
That makes sense. They were in a phase of rapid expansion.
Exactly. Now they're focused on optimizing that existing space and investing in the machinery and equipment needed for specific growth areas like electric vehicles and wind energy. Think of it as being smarter with their investments rather than simply spending less. They are making strategic choices about where to allocate capital for maximum impact.
So they're prioritizing efficiency and getting more bang for their buck, so to speak.
Precisely. And this efficient approach is evident in several areas. For instance, they're localizing the production of a key electric vehicle component called the EXL Pro.
That's a really smart move. Are they trying to become less reliant on global supply chains with this localization strategy?
It certainly seems that way. Localizing production not only reduces their dependence on imports, but also potentially lowers costs and gives them more control over their supply chain, which is crucial in today's volatile global landscape. And they're not stopping there. Their merger with Vitesco is another game changer, especially for someone like you who's trying to understand the future of this company.
Vitesco. Remind me what they bring to the table.
Vitesco is all about electronics and software, which allows Schaeffler to offer more sophisticated and integrated solutions. Essentially, they're moving up the value chain, becoming a more comprehensive player in the mobility space.
Ah, right. So they're not just a mechanical engineering company anymore. They're incorporating cutting-edge electronics and software into their offerings. That's impressive.
Exactly. And remember that dip we mentioned in their Vehicle Lifetime Solutions segment? Well, part of their strategy there involves a pretty fascinating shift from focusing solely on the aftermarket to building stronger partnerships with original equipment manufacturers,
Hello.
OEMs.
OEMs. For those of us who need a quick refresher, what exactly does that mean?
OEM stands for Original Equipment Manufacturer. Basically, these are the companies that manufacture the vehicles themselves, so instead of just selling parts in the aftermarket, Schaeffler is now working more closely with the companies that build the cars and trucks in the first place.
So they're becoming more integrated into the vehicle manufacturing process, which could potentially lead to a more stable revenue stream.
Exactly, it's a strategic move that could pay off handsomely in the long run.
Okay, so we've covered a lot of ground already. It's clear that Schaeffler India is a company in motion. They are adapting, innovating, and strategically positioning themselves for success in a rapidly changing market. But there's still so much more to unpack, right?
Absolutely. We've only just scratched the surface.
I can't wait to dive deeper. There's so much more to learn about Schaeffler India and their unique approach to navigating the complexities of the Indian market. Stick with us, because in the next part, we're going to explore some fascinating details that reveal just how savvy and forward-thinking this company truly is. Welcome back. I'm really eager to hear more about those intriguing details you mentioned, the ones that highlight Schaeffler India's savvy approach. What really jumped out at you?
Well, let's talk about localization. Schaeffler mentioned they've achieved 76% localization as of December 2024, meaning they're producing a large chunk of their products right there in India.
That seems like a really smart move, especially with all the global supply chain disruptions we've seen lately.
Exactly. It gives them more control and potentially reduces costs. Plus, they're aiming for 80% localization in the midterm, showing a strong commitment to strengthening their Indian presence. And this resonates with the government's Make in India initiative, which seeks to boost domestic manufacturing. So Schaeffler is aligning itself with national priorities, a win-win situation.
Definitely a savvy move. What other insights caught your eye?
Remember our discussion about their focus on improving working capital management? That's paying off with positive impacts on their free cash flow.
Free cash flow. Could you explain that a bit further for those of us who might not be, financial experts? Why is that important?
Of course, free cash flow is essentially the money Schaeffler has left over after paying for its operations. More free cash flow means they have more flexibility to invest in growth, pay dividends, or even buy back shares, all of which can be good for you as a potential investor. And speaking of flexibility, Schaeffler also mentioned they're redefining their approach to balancing production between OEM and aftermarket demands.
This balancing act between OEM and aftermarket seems to be a recurring theme for Schaeffler. What's driving this shift?
It appears they're recognizing the importance of not putting all their eggs in one basket by diversifying their production. They can mitigate risk and adapt to changing market dynamics more effectively.
That's a wise strategy in a market as complex and dynamic as India's. What else did you uncover in your research?
Here's a detail that I found particularly insightful. Schaeffler is investing heavily in Industry 4.0 technologies, particularly in their Savvy plant, think automation data analytics, the whole digital transformation package.
Industry 4.0 is often talked about as the future of manufacturing. So Schaeffler isn't just adapting to the present, they're building for the future as well.
Exactly. They're not just talking the talk, they're walking the walk. Remember those customer awards we mentioned earlier? One was for successfully implementing an electronic data interface with a customer streamlining their transactions. That's Industry 4.0 in action, and it benefits both Schaeffler and its customers.
It sounds like they're really embracing innovation on multiple fronts.
Absolutely. But it's not all smooth sailing during the Q&A portion of the earnings call. They mentioned some slip-ups in their railway sector product portfolios.
Oh, no. That doesn't sound good. Did they elaborate on what happened?
They did acknowledge the setbacks and were transparent about the challenges they faced. They attributed it to a few factors, including some internal missteps and external market conditions. However, they seem confident about bouncing back. They discussed new product approvals, capacity buildup, and aligning with the Indian Railway's own modernization efforts.
So even when they stumble, they are open about it and have a clear plan to address the issues.
Exactly. This transparency is crucial for building trust with investors and stakeholders. Speaking of transparency, they were also quite open about the challenges they faced in the vehicle lifetime solutions segment, which, as you'll recall, is their aftermarket
Right,
business.
Brad. That part of their business saw a slight dip. What
Yeah.
specific challenges were they facing there?
They pointed to a few key factors. One is the shift in the market towards OEM, demands more vehicle manufacturers are strengthening their own service networks, leading to increased competition for Schaeffler's aftermarket business.
So they're facing pressure from both ends, a changing market, and increased competition from the OEMs themselves.
Mm.
How are they responding to this pressure?
They're adapting by focusing on expanding their own product range and launching new products, particularly for BSVI vehicles.
BSVI, for those of us who may not be familiar with Indian regulations, what does that mean?
BSVI refers to Bharat Stage 6, which are the latest emission standards in India, by offering products that meet these stringent regulations. Schaeffler is staying relevant and catering to a growing market segment. They also mention a liquidity crunch in the market affecting the aftermarket segment.
So it's not just Schaeffler's own challenges, but broader economic factors at play as well.
Exactly. It's always a combination of internal and external factors, but despite these challenges, they're seeing signs of positivity and are actively working on strengthening their aftermarket business.
Okay, so they're facing headwinds, but are adapting their strategies to overcome them. Now, you teased some really exciting developments earlier. What are those?
Well, one development that really stands out is their growing focus on the electric two-wheeler market. We already talked about the rapid growth of this segment and how two-wheelers are ubiquitous in India.
Right, seems like everyone in India has a scooter or motorcycle.
Exactly. Schaeffler is already supplying sensors and electronic solutions to two-wheeler manufacturers, but now they're gearing up to offer complete electric powertrain solutions.
That's a bold move. They're taking their expertise in electric mobility and applying it to a segment with enormous growth potential. What a smart way to diversify their offerings and capture a larger share of the EV market.
Precisely. It's a strategic move that demonstrates their understanding of the Indian market and their commitment to being a leader in the electric mobility space. They're not just waiting for the market to evolve, they're actively shaping it.
This is incredibly exciting. It's like witnessing a transformation in real time. What other developments are they pursuing?
They're also seeing increased interest from OEMs for their e-axle solutions, particularly after showcasing their capabilities at the Auto Expo.
The Auto Expo is like the biggest stage for the Indian auto industry, like making a strong showing that must have been crucial.
Absolutely. Their presence at the Auto Expo helped solidify their position as a key player in the electric vehicle space. They showcased their ability to offer a variety of e-axle solutions, including 3-in-1 and off-axis configurations.
So they're not just offering a one-size-fits-all solution, they're providing a range of options to meet different customer needs. It sounds like they're positioning themselves as a one-stop shop for electric vehicle solutions.
Exactly. They're showcasing their versatility and adaptability, which are crucial in a rapidly evolving market, and they're leveraging their global expertise and resources to achieve this.
I'm really interested in this global perspective. Tell me more about how they are leveraging their international presence.
A prime example is their merger with Vitesco, which we touched upon earlier. Vitesco brings expertise in electronics and software, complementing Schaeffler's traditional strength in mechanical engineering.
So they're blending the best of both worlds, traditional engineering, with cutting-edge electronics and software. It's like they're creating a hybrid powerhouse of innovation.
Indeed, this merger empowers them to offer even more advanced solutions, including power electronics, thermal management modules, and battery management systems, all critical components for electric vehicles.
Wow, they're really covering all the bases.
Mm.
It's impressive to see how they are building such a comprehensive portfolio of electric vehicle solutions.
And it's not just about acquisitions and mergers. They're also heavily investing in R&D and innovation during the earnings call. They emphasized their continuous work on new product development and adapting their offerings to meet evolving customer needs. They're constantly evolving and staying ahead of the curve.
So it's a dynamic process. They're not just acquiring technology, they're constantly innovating and developing new solutions in-house.
Exactly, and this commitment to R&D is reflected in their financials. They consistently allocate a significant portion of their budget to research and development, signaling their long-term vision and commitment to staying at the forefront of technological advancement.
It's clear they are playing the long game and not just chasing short-term gains.
Yeah.
That kind of commitment is reassuring for investors.
Absolutely. And their forward-thinking approach extends to their commitment to sustainability as well.
Sustainability is a hot topic these days.
Yeah.
Every company needs to demonstrate its commitment to environmental responsibility. What specific steps is Schaeffler taking in this area?
They've implemented numerous initiatives to reduce their environmental impact, including energy efficiency programs and waste reduction measures. They've also incorporated sustainability principles into their product design and manufacturing processes.
So they're not just paying lip service to sustainability, they're integrating it into their core operations and product development. That's impressive.
Indeed, they're walking the walk, and that resonates with customers who are increasingly demanding sustainable solutions.
Okay, so we've covered localization, financial performance, technological advancements, sustainability. What else is there?
Well, it's not all sunshine and roses. There are areas where they are facing some headwinds. One of them is their KRSV Innovative Auto Solutions business.
KRSV, isn't that their e-commerce platform, the one they acquired a while back? What's happening there?
They're still working on making it profitable. It generated about 158 crores in revenue for the full year, but it's not in the black yet.
So it's a work in progress. What's their strategy for turning it around?
They're focusing on expanding KRSV's geographic footprint beyond its current presence in Bangalore and Chennai. Wider reach means more potential customers, which could help drive revenue growth. They're also adding more products to the platform and streamlining its operations to improve efficiency.
So it sounds like they're committed to making it work. It's just going to take some time to achieve profitability in the e-commerce space.
That's often the case with online ventures. It takes time to build a loyal customer base and optimize operations, but the potential is there, and Schaeffler seems determined to tap into it.
Okay, so they are facing some challenges. But overall, it seems like Schaeffler India is navigating the complexities of the Indian market with impressive agility and foresight.
Absolutely. Their performance in 2024 showcases their ability to adapt, innovate, and seize opportunities in a rapidly evolving landscape. They are making strategic moves, investing in cutting-edge technologies, and demonstrating a commitment to sustainability, all while keeping a close eye on their financials. It's a compelling story of growth and transformation.
It certainly is, but the story isn't over yet, is it? We've looked at their past performance and current strategies, but the real question is, what does the future hold for Schaeffler India?
That's the million-dollar question, and it's what we'll explore in our final segment. We'll delve into the crystal ball and see what insights we can gather about Schaeffler India's journey ahead. Get ready for an insightful ride.
All right, so we've covered a lot of ground, exploring Schaeffler India's performance, their strategic moves, and even their commitment to sustainability now. For the big question, what does the future hold for them?
Predicting the future is never easy, but we can look for clues in, their current actions and statements. One thing they've repeatedly emphasized is their ambition for double-digit growth.
Okay, that's a pretty bold target, especially considering, the economic uncertainties we talked about earlier. Do you think it's achievable?
It's ambitious, but not necessarily out of reach. Remember, they've got a multi-pronged approach here. They're targeting growth in both traditional and electric vehicle segments, expanding their industrial solutions business, leveraging the Vitesco merger, and exploring new markets like, electric two-wheelers.
So they're diversifying their growth strategy, not putting all their eggs in one basket. That makes them a lot less vulnerable to market fluctuations.
Exactly. This diversification is key, to navigating uncertainty. And they've also highlighted their focus on operational efficiency and cost management.
Right. That makes sense. In a volatile environment, being lean and efficient is crucial for resilience.
Absolutely. They're streamlining operations, optimizing capital expenditures, and prioritizing profitability. This disciplined approach should appeal to investors looking for sustainable growth.
It certainly makes them a more attractive prospect. They also reaffirm their commitment to shareholder value, evidenced by their, consistent dividend payouts. That's a good sign for those who are considering investing.
Indeed. It shows they're committed to rewarding their shareholders. But, beyond the financials, their strategic direction is also worth considering. Are there any clues about where they're heading in the long term?
Well, one clear direction is their increasing focus on electrification. They're clearly positioning themselves as a leader in, the electric mobility ecosystem, offering a wide range of solutions for electric vehicles.
And they're not limiting themselves to just cars. Remember, their foray into the electric two-wheeler market. That's a smart move considering the massive potential of that segment in India.
Right. They're tapping into high-growth segments, which is a sign of smart strategic thinking.
They're also investing in technologies that will be crucial for the future of mobility, things like power electronics and battery management systems. So they're not just reacting to the EV trend, they're actively shaping it.
It's like they're building the road as they drive on it. They're anticipating future needs and developing the solutions to meet them. What about their foray into Industry 4.0 technologies? How does that fit into their long-term strategy?
It's all about future-proofing their operations. By embracing automation, data analytics, and digital transformation, they're making their manufacturing processes more efficient, agile, and responsive to market demands.
So they're investing in the infrastructure and technologies that'll enable them to stay competitive in the long run.
Exactly. This commitment to innovation is crucial for them to, maintain their edge. What else caught your attention when you were considering their future prospects?
Well, their emphasis on localization stood out to me. They're aiming for 80% localization in the midterm. That's a significant commitment.
It makes them less reliant on imports and more integrated into the Indian economy. It also aligns perfectly with the government's Make in India initiative, which aims to boost domestic manufacturing and reduce dependence on imports.
So they're aligning their business strategy with national priorities, which is a smart move. It strengthens their position within the Indian market and demonstrates their commitment to contributing to the country's economic growth.
Precisely. They're thinking long-term and building strong partnerships within the Indian ecosystem. This strategic alignment can be a powerful driver of growth and sustainability.
Okay, so taking all of this into account, their financial performance, their strategic moves, the market trends, and their own statements, what's your overall assessment? What does the future hold for Schaeffler India?
I think the future looks cautiously optimistic. They are facing headwinds such as, geopolitical uncertainties impacting exports and the challenges in their e-commerce business. But they're also well positioned to capitalize on growth opportunities in the Indian market.
So it sounds like a mixed bag, but with more positive than negative signs.
Yeah. I would agree with that. No business operates in a vacuum. External factors always come into play. However, their focus on electrification, Industry 4.0 technologies, and localization, coupled with their commitment to operational efficiency and shareholder value, suggests they're on the right track.
So the final verdict is that Schaeffler India is a company to watch.
Absolutely. Their journey is far from over. The next few years will be crucial as they solidify their position as, a leading motion technology company in India. We'll have to keep an eye on how they navigate these complexities and capitalize on emerging opportunities.
Well, that brings us to the end of our deep dive into Schaeffler India. We've explored their financials, dissected their strategies, and gazed into the crystal ball to get a glimpse of their future prospects. What a journey it's been.
We've covered a lot of ground, from their impressive financial performance to their strategic moves in key growth areas like electric mobility and renewable energy. We also delved into their challenges, such as the need to adapt to the evolving aftermarket landscape and their ongoing efforts to turn around their e-commerce business.
It's been a fascinating exploration, and I hope you, our listener, have gained some valuable insights into Schaeffler India and their unique approach to thriving in a dynamic and complex market. But this isn't just about Schaeffler. What we've discussed has, broader implications for the Indian economy as a whole.
You're right. Schaeffler's story is a microcosm of the larger trends shaping India's economic landscape. The shift towards electric mobility, the embrace of Industry 4.0 technologies, the push for localization, and the growing importance of sustainability. These trends are transforming industries and creating both challenges and opportunities for businesses operating in India.
So what does this all mean for you? We've given you the pieces, but it's up to you to assemble the puzzle. Think about the trends we've discussed. How do you see them shaping the future of mobility and manufacturing in India?
And what role do you think Schaeffler India will play in this transformation? What are your predictions for their future? We'd love to hear your thoughts.
That's it for this deep dive. But the conversation doesn't end here. Keep learning, keep questioning, and keep diving deep.